All right, there we go. Welcome back, everyone. It's Friday, February 24th, and if you've been paying attention, you'll know that today we've got a bunch of economic data that should actually already be out. We've got core PCE, or personal consumption expenditures. We've got two other things that I forget. My internet is not loading, so I sound like a goofball. So I'm just going to invite some other people up here so that they can explain what's going on and why markets are the way that they are.
Hello, everybody. Hello, Opinion. Hello, Latter Day.
Hello, hello. Welcome
Howdy.
back.
Here, let me pull up the economic calendar for you, Opinion, then.
Thank you.
Yeah, I can chime in real quick. So 8:30 today is already out. Consumer spending for January, as well as personal income nominal for January, as well as the PCE index, the core PCE index, the core PCE year over year. And then at 10 a.m., we have the new home sales. 10 a.m. Also, we have the consumer sentiment final. That would be for February. And then we have a whole bunch of Fed speakers today from 10:15 a.m. all the way to 1:30.
Thank you,
Beautiful.
Elliot. So let's talk about 10 a.m. We got the existing home sales coming out. Was it yesterday or was it 2 days ago that a report came out that $2.3 trillion we're down in as of housing prices? Is that correct?
In home values.
Home values.
Home
Okay.
values across.
So do you guys see this as a trend, or do you just see this as a one-time off, just a small drop, and then you guys are thinking we're going to bounce back? What's the sentiment?
I think it's a trend.
Historically speaking, when you really look at like inflation spiking, and then I think it was consumer debt and home prices, like home values in correlation, when the home values start to dip, it's been a canary to an upcoming crash or basically a recession. And so usually home values are dropping as a leading indicator when all those other conditions are already set.
Thank you for the insight. With that being said, anybody short on REITs? Whether it's commercial or residential REITs, anybody looking for a play there in the REIT market, anticipating this downward move?
Well, if they are, I guess they're not up here.
Well, I talked about the REIT CEA, which is a residential REIT that we're 8% to the U.S. federal government. It's a double whammy, one because of property values, and two because of a looming government shutdown could potentially temporarily impair their cash flow. So that's a play that I'm looking at getting into here in a few more months when the Treasury's emergency measures get closer to expiration. As of right now, I'm not in the play, but it's one that it's on my radar.
What was that ticker called?
The ticker is DEA, Easterly Properties Group. Yeah, 98% of their rental is the United States federal government. So if you look at how the stock has performed through past shutdowns, it typically dips and then rips, right? Because they eventually get those payments with penalties after the shutdown's resolved. So that's just a play I'm looking at making.
Looks like a good play then, if you're eventually gonna make it. Because yeah, I'm very bearish on the housing market with this new data coming out.
Keep in mind, companies like Blackstone have tremendous exposure to single-family residential homes, and the price of single-family homes are largely dictated by the monthly payments its residents can afford. So I'm waiting. Right now, it's very close to delta neutral. I'm waiting for Gamma Max to come back down before I start buying puts against Blackstone.
Speaking of Blackstone, Hardy, what do you think about? I think there was recent news came out that two commercial buildings, office buildings, valued at 700 million, in California belong to BlackRock, but they're declaring bankruptcy on those two buildings. You think that started the domino effect?
You have a
Sorry,
link to the
BlackRock
source?
and Black. Oh, I
It
just
was
wanted to say real quick, BlackRock and Blackstone are two different companies. Moving
yeah.
on.
I always mix them up, but it was either BlackRock or Blackstone that they had two of these large commercial office buildings. That
Do you have a
Yes,
link to your article or source? Put it in the comments so I can review. Because I
He's
can't
talking
find
about
it on
the
Yeah,
the
is there?
Twitter building. Yeah, I saw that as well. I don't think
Do
that
you
set
I
it
know
also
was
off.
it was
I
it
also have
Blackstone
an
or
article.
BlackRock? Do you remember?
It doesn't matter. It was like immaterial. Basically, the person doesn't move the market cap of real estate. It's just somebody who's rich who happened to own Twitter headquarters, and Elon Musk was being a dick and not paying his rent. And this person happened to file for bankruptcy.
I
Talking
just
about
posted it.
Brookfield?
I'm assuming that's
Yes,
who
it
he
was
was talking
Brookfield.
about. Yeah.
So it's the gas company tower that defaulted on a $465 million loan. And lenders can now foreclose on it. So Brookfield DLTA.
It's perfect. I was looking for office space in San Francisco.
It's in LA.
Damn it. No go then.
I just posted a chart in the chat that's pretty interesting and spicy off of Fred that shows the housing prices as it related to the last couple recessions.
So here's an interesting play, although a slightly morbid one. The stock is Montrose Environmental Group. The ticker is MEG. Yesterday, they had 5 executives for one of their subsidiaries die in a plane crash. They have a market cap of 1.49 billion, and they are currently at after close yesterday about $7 off their 52-week high. This might accelerate their downslide.
What's the ticker?
MEG, Mike Echo Golf.
The Meg.
Good morning, everyone. So based on what everyone was talking about with all the economic news that's going to be coming that already came out today, as well as the array of Fed speakers throughout the day, I haven't worked out the numbers yet, but I'm thinking about doing a strangle on SPY and maybe closing one leg at a time, just based on when it goes upsies and then when it goes downsies. That's my current plan, but we'll see.
Wasn't there also the other day or yesterday a billionaire that shot himself? Something like that? Didn't that happen?
On accident or on purpose?
No, he shot himself on purpose. Like he killed himself.
For what reason there, Mister?
Mr. Lee. I don't know why, but yeah, Mr. Lee.
I
Mr. Lee
heard he had
$2
calls
billion.
on Warner Brothers.
I think most of his stuff is in healthcare, and he kind of just went into his office and shot himself. So I don't know if that's something.
I think he was suffering actually from some sickness, at least. But yeah, it's all speculative right now.
Yeah, it's always speculative, so every time.
So I've exited Pure Cycle, taken my gains on it. It had some nice downsies from the time I mentioned it to now, and shout out to Luce for giving me the exact way to play it. I appreciated his trade on it. short selling it directly with the collar. Turned out pretty well.
Hey,
To which I say, congratulations and screw you.
well, I also don't say this like congratulations or screw you to him in the sense that we've maybe known 2 weeks to 2.5 weeks ahead of time before this disaster happened, even though that there was a show White Noise about it, like kind of like, but that was just like whatever. You know, that we've got this information that like we wouldn't have had other than the balloons happening everywhere around the world. You know what I mean? Not around the world, like around the United States, mainly in one place. Right? So like they defer your time from you paying attention to things that I was concerned about your health, Scald, Crypto, because I really actually was very concerned about your health. And this comes from my heart. Like I actually thought that you were getting sick from this. And I really mean this from the bottom of my heart, that I was going on my own little fucking tangent. But that's from the bottom of my heart. I think you can get that.
You mentioned the word heart. I'm assuming you're Canadian here in America. I'm just wondering if you can define what heart is.
Well, it's
is
that
it
you're
the thing
bringing
where I
those.
put the
It's
money?
that you're
or...
bringing those chemicals up to our country so that we can fucking remake them into fucking goddamn like PVC pipe for you guys. I think that's the way it works. I think we get them from you guys. But, we distribute them somehow. I'm not saying that that's how it works, but there's some tangible lines there. I don't want to get involved in this because I'm not part of the railroads. Thank you.
Well, this
Since we're talking
most
about
recent
art.
delivery, is in airborne form. So just look to the skies. We got a new way of delivering it up to Canada.
Disgusting.
There are reports of the chemical spill in Canada, by the way. If you guys haven't been following the news on East Palestine, Ohio, there are now chemicals being detected as far north as Canada, looking like this might become an international incident for Norfolk Southern, which is probably bad for that company.
It definitely gets into the waterways, eh?
Yeah, they're scrubbing the waterways right now, and residents that are asking what is going on are being told by the cleanup crew that Norfolk Southern has told them not to talk about it. So there's a lot of people documenting the cleanup process and people working, but apparently NSC has told people doing cleanup don't say anything to reporters.
Good morning, all. I'm really disgusted by the shut the fuck up thing.
Well, thank you for sharing, Rockstars. Does anyone else have any plays?
Yeah, puts on Warner Brothers.
But gentlemen, why Warner Brother?
I think relative to the streaming services, you're going to see a rotation back into Disney, Netflix, and a rotation out of multiple streaming services. I think people will go from 4 streaming services to 2. And I don't think that bodes well for Warner Brothers, but I do like the fact that they have found a way to build on their IP. I just think they need more time to get there.
Do they have an associated streaming service?
Pretty good pitch for Warner Brothers. Convince a fair number of people.
Smoen, like you sound like you're being like you have a cloth bag over your head or something.
I think it's the chemicals.
Oh, dang. But yeah, we had a loose up yesterday, and I think the day before. He actually posted some pretty detailed DD on Warner Brothers about why it would be a good buy.
It was a great buy, and the earnings call was really interesting, but the play was for me going into that earnings call and well beforehand. If it runs up during earnings, still buying puts. In fact, I was hoping for a better entry point on the puts, but I didn't get them.
Yeah, longer term, it's a good play to acquire, but short term, because of the earnings and the acquisition of Discovery, they have some expenses that they still need to absorb, some costs that they need to absorb. So I bought leap calls, like far outdated calls, hoping that they can do what they say they're going to do. But for the earnings play, I bought puts, and those should be printing this morning.
So you're just is this specifically for D gentlemen? Are you going super short term on these puts, or how far out are you planning with those?
March 17th.
So you're just trying to catch the backslide from the earnings run up.
Basically, I heard the bear case, bull case. I liked both of them, and I thought if the bull case was right, then I would have a better entry point on the bear case. I know that sounds counterintuitive, but essentially, I don't think that Paramount and Warner Brothers win the streaming battle.
So does the hot PCE print put the Fed at 50 bips for March?
I don't think they'll do it that quick. I think they'll keep on the 0.25 and just extend the runway. Just 1.5 years to 2 years is the runway I think they'll be on in terms of when they finally start to decrease the rates. I think it'll be 0.25 hikes until they get up to like 5.5, and then they'll stabilize it for 3 to 6 months. Then they'll decrease it, and then the market will go to shit.
I'm a little concerned that personal spending went up month over month, 1.8% versus 1.4 expected. I'm wondering how much of that incrementally higher personal spending has to do with the fact that groceries cost more, inflation is taking effect, and things
How
of
much
that
of that
nature.
do you think is the YOLO spend, where you tap out the savings and you put the last purchases for what would be the previous year on the credit card? I saw a lot of people paying through the nose for their last travel for Q4.
Another possibility is people spending faster because they got their severance.
There's that, but it also appears that people are spending on credit cards. Consumer debt is rising, and then I think now with that decrease in the value of residential homes, some people that have equity lines of credit on their homes might be underwater at this point. So there might be a stifling of their spending in the coming months.
This is a far-fetched idea, but possibly the reason why spending's up is that people want to use their money while it has more value now, just so that as inflation continues to grow, the money that they have now is more efficient, maybe.
So we're going with the German wheelbarrow theory, huh?
If that's the name of the theory, sure.
Well, I'm basically alluding to the fact that after World War I, when they were printing money even more than we were after COVID, it completely tanked the German mark. And then you had people like my grandmother who had to run to the grocery store with a wheelbarrow full of money so they could buy a dozen eggs instead of 2. Wow, that's really translating way too well today.
We're far way away from hyperinflation. That's like I think they hit 17,000% month over month inflation there, and we're not that's a long ways off, thankfully. So hopefully we don't get there.
Yeah, I mean we're the reserve currency for the world, right? So we can just print more. I mean, we're not going to have that problem.
Yeah, but it's a weird one though, because like, okay, so I mean, this is restaurants, okay, right? I'm just gonna throw this one's way out fucking luncher. Is that when it comes to the Cheesecake Factory and other places that are niche like them, right? They're still making money, right? Because people still pile into those places, right? Whether it's like their youth, right? Like the youth and us, right, our age, that just pile in there, right, and then they just want to go to it, right? Like they can always fill that place up. So my point being is like there's not a lot of margin, should I say? It's not the right word for it, but there's not a lot of like, you know, that you can get on it when you're trying to look at options, because this is what we're looking at with them. You're not going to be looking at them to buy and hold, even though they do pay a dividend, I believe. It's like, you know, are you going to be able to?
Okay, so it looks like we might have lost him for a quick second. What else we got for today? Anybody got any good plays coming on? It's 10:52, so we got about 30 minutes till market open, plus 8 minutes. So thinking today that AAL might be a good side for the put side. Also looking at BAC. As you guys know, I love playing the banks. I'm thinking some put side for them. Hopefully, the banks will gap up though, because that'd be good for the market, and that dollar needs to stay strong. Oh, and I also wanted to say I'm looking at Toyota calls because I feel like Toyota's got some good things in the works. They actually invented with a construction company a way to clean soils. So thinking that that might be nice.
Do you have any hot
We're
take
going
on
to
the
need
Bank of
that here in
Japan?
Ohio.
Do you have any hot take on the Bank of Japan taking back their bonds or buying them back?
I don't want to comment on that.
Ooh, I'm definitely going to look into that then.
We love clean dirt.
I'm sure East Palestine would love that.
I have been thinking, based on just the correlation between the S&P 500 and Robinhood, that Robinhood hasn't come down with the S&P. I'm thinking about getting like monthly puts, but again, because of the recent, as in like the past week, Robinhood hasn't been following the S&P. Maybe that correlation has broken.
Yeah, it broke.
But ultimately, yeah.
The hedge funds are saying it's broken because Robinhood is making money off you guys trading 0 DTEs, and that's not going to be reflected in SPY. It's going to be reflected in basically whatever ETF has the largest mixture of whatever stock you're trading. So, like, let's say you guys are aping into Tesla on puts or whatever today. They're going to make their margin off of you trading bad options contracts, not off of whether SPY goes up or down.
So in periods where there's high market volume, we should expect to see Robinhood's price go up. And when volume goes down,
we're in a new era of trading where people are trading options that have no idea what the fuck they're doing. And Robinhood and these other brokers are making massive spreads. Rather than you guys holding shares and selling your shares back and forth. You don't even have the shares. They have the shares, and they're selling you options contracts while they're holding the shares.
Brokers very rarely hold the shares or maintain a skewed balance on their books. Market makers, on the other hand, do. Now with Robinhood
Sorry, that's what I should have said.
Robinhood specifically has no direct access to the markets, so you only ever see a sanitized view that Robinhood's market-making partners want you to see, which basically means shit fills.
Yeah, the guy that I know that is a market maker, it's only him and another buddy, and they do pretty well. And they're basically trading against us, so. Anyway, I hope you're right about SPY and Robinhood at some point. I just think that, that old trend is broken because of the new trend in how people are trading.
It might make a worthwhile pairs trade. puts on Robinhood, and then puts on SQQQ. So basically, you're shorting Robinhood, and then buying shorts against an inverse SPY ETF. I do know, at least for me, I'll be rolling into a new expiration on my GameStop short cash secured puts. Especially as we approach the run up to earnings.
Speaking of meme stocks, is anybody paying attention to the case in the Delaware Court of Chancery or whatever it's called with APE, AMC, and the AMC preferred equity? Basically, it seems like the AMC shareholders are trying to prevent the dilution via APE, but now that whole trade where, you know, AMC must go down and APE must go up looks like it's going to break because they're taking AMC and APE in the downward direction. Curious if anybody has any opinions.
I think everybody from APE is just scorched right now.
Well, it's like, where's Rad?
Oh, doesn't Tuesday Fly have an APE position? Or he has an
He has
AMC position,
AMC.
actually.
AMC, yeah.
He's like down $40,000 on AMC.
Oh, okay. Okay.
Analysts are downgrading Wingstop, ticker symbol WING.
Really? I thought that P was like fair value.
I can't control what the analysts are saying.
That's a little sarcasm for you. If anybody hasn't seen Wingstop's PE, give yourself a laugh and just Google that real quick.
That thing was resilient, though. I tried a put spread on it, had to close it out before it started to really go against me.
Smart enough that you were able to get out of a trade. Most people like bag holding.
Is that the new can't stop Wingstop?
What are we thinking on that? Do we have any information on these consumer spending and the personal income data that came out, the PCE index and the core PCE index?
Yeah, they revised it. So the initial estimate was revised downward in the sense that PCE came in higher than they initially reported. Like they're saying that the price, or basically the rate of inflation decreased, but then they revised it and said it didn't decrease as fast as they initially thought. Did you want specific numbers or like?
Oh no, I was just trying to get a recap for everyone, including myself. I know we talked about it in the morning. Just kind of that came out. I just didn't have the information on hand, so I do appreciate that update.
Yeah, I don't remember exact numbers, but the sentiment reading it is like the first estimate was too rosy relative to what was actually going on, which kind of, you saw like January take off, like, oh, things are, back on track. And then the second estimate comes out and they're like, actually, we have a lot more work to do and it's going to take longer than we thought.
All right, awesome. And then I know we're having new home sales come out 10 a.m. That'll be interesting. And then obviously consumer sentiment coming out too. I think we're kind of obvious on consumer sentiment, but new home sales should be interesting. I think new home sales are I would say they're just kind of like average right now. I don't think they're like overly shot per se. I mean, we're not going to get a home run on the new sales, but obviously people are still buying, and in the month of January, that is.
The last few reports I've seen have said that basically the last year we've seen month over month declines. So maybe we can see some correction in the rate of decline.
Awesome. Does anybody have any experience in the construction industry? How's your industry going right now? Or electrician, plumber, anything like that?
That's going to depend on the sector of construction you're in.
Yeah, I mean, home remodeling and home improvement type stuff is slower than it was last year. I mean, it's still there, but it's definitely about half of what it was last year right now, and that's in Georgia.
They're still building crazy lab space all around me, so I think they are more safe than home people.
There's also a trend of modernizing city planning that's giving a lot of home builders business. We kind of talked about this the other day. If you drive down a street and see one house, a big gap, and then a second house, a lot of these cities are trying to figure out how they can get more houses per block. So they're basically taking those lots, creating duplexes, and now they can get like 4 living units where there used to be 2 houses. And so throughout the West Coast, I'm seeing reports coming in of cities investing heavily in that type of home building. Another city where I see this happen a lot is Nashville. And you can kind of look at the average price people were paying in the area when they first start building these types of homes versus what they're selling for now. And so you're looking at something where on average the homes are worth like 120,000, but 5 years out sell for like 350,000. So maybe you're not going to see first-time home buyers in the market right now, but there is a lot of home building that's occurring because of people revising how many homes they have per square block.
I can discuss on the UK. It's not really relevant to consumer. It's more commercial. So, for example, in the UK, the Amazon have they were rolling out a lot of large warehouse units to obviously to cope with demand, but they've actually put a stop to a few of them now. And there was a big rush for them to get them finished, but then all of a sudden it's not really been at the forefront of their planning. Now they're getting towards the end of the project life cycle of where they're actually going to be handed over to Amazon. It's turned into, we're not going to push for these to be finished as quick as possible anymore. So I think there's obviously been a large decline from Amazon in a lot of the commercial spaces of need.
Gentlemen, to your point, I'm here in Columbus, and they definitely use this multi-use functionality more so, and that trends in the last 5 years here, where it's multi-units plus some commercial space. So trying to get that extra use out of that space, I think it's becoming more prevalent here in the States.
Yeah, that's why I think it's hard to separate trends in building versus buying.
Yeah, I do some construction, or at least I did a few years ago, and I've noticed that there's a lot more, at least where I live in Erie, which is between Columbus and Pittsburgh. There's a lot of like rural house development, but out this way, as it happens, I just so happen to be closing on a house at the end of next month, and our market is still really competitive. The house that I bought wasn't like super overpriced, but if I didn't have an offer on it 2 days after it went to market, I would not have gotten it. and I probably missed half a dozen houses that were in a similar situation where you see it a week after it gets posted, and you schedule a viewing, and by the time you have a chance to get in there, somebody's already made an offer and it's been accepted, and that's been happening a lot out this way. But I do see like signs overall of the market shrinking, but at least in this area, it's busy.
Yeah, there's basically a transaction recession in real estate right now. People are afraid to sell. They're afraid to move because of that, where it's still such a tight market. So the realtors are going crazy because that's how they make their money. It's turn and burn. And right now, you're right. They're still not necessarily overbidding, but you got to bid within a day or two because of such low inventory still out there.
I think it has to do a lot with price range too, because a year ago, some of my friends in Philly, where I used to live, if you didn't have at least $250,000, you weren't seriously looking to buy a house, and that was to buy like a little row home, like a 2-bedroom row home. At least $250, you probably end up paying $290, and for me, I've been looking at houses in like the 130 to 175 range. And it feels like the more expensive things, anything over like 180, at least in this region, stays on the market, even if it's worth the money. But anything that's cheap, even if it's a cheap fixer, unless it has like serious problems with it, like some idiot made a doorway by cutting a hole in a wall and just hanging a door hinge on it, unless it's something like that, it moves fast.
Yeah, I'm a realtor. It's actually gotten a lot tougher out there as far as inventory over the past year. Agree with, I'm not sure who it was, but someone said earlier about people being hesitant to sell. We do have a lot of cash investors that are swooping in right now. I did want to discuss, I don't know, apologies if you guys already got into it, the Adobe selling off a little bit this morning on news from the DOJ that they may block one of their acquisitions. I'm not even sure who the acquisition was, but Hardy, I wanted to hear your thoughts. I'm thinking about calls for April 21st. I believe 3:30 is the strike price.
Was that for ADBE, Adobe?
Adobe, ADBE, yes.
And that was their the acquisition of Sigma was in question. Yeah.
Yes. Did you guys already discuss that today? I'm just hopping on the call.
Not sure. Me too.
We did not discuss it.
No, we didn't discuss it yet. Hardy, can you hear us?
I'm here. What's up?
Oh, we got someone that wants you to look at ADBE. Go ahead.
Yeah, Hardy, I was
asking about it. Go ahead.
I'm sorry, Hardy. Yeah, I was looking at Adobe, ADBE, on a little bit of a sell-off today. It's down about 3 or 4% on news that the DOJ is blocking one of their acquisitions. I'm looking at April 21st call, strike price 330, on the thesis that the reaction is overdone and the stocks, if you look at the chart, has already sold off significantly from its highs. Kind of tie it to, the NVIDIA's type of, it's got legs in the AI space and legs in the future. So thinking it might be an attractive play. I wanted to hear your thoughts on it.
It makes sense. But what exactly caused?
So I can
Is it
chime
because
in here.
the acquisition of Figma is being blocked?
Yes, it just came out this morning. I just saw it as I was having my morning coffee. So
actually, it came out yesterday. So that's sorry
Okay.
not to. So it may, if you looked at the price move yesterday, it was even more. So, but yeah,
okay.
20 billion acquisition. I believe they do AI or additional information. Sigma does, and yeah, it may get.
Figma's for wireframing websites.
Okay.
You can do basically mocking up features. So like we use it at our company. We have a web interface for our product, and the designers and the product managers will collaborate on Figma to mock up features that the UI UX people will go build out. It's a really popular tool. It's a really strong tool. We've been using it for a while. I've known of UI UX people at basically every company I've worked at using Figma. The thing is, guys, that like Adobe bought Figma, I want to say in like late 2021 or maybe early 2022, certainly when interest rates were much lower. So the stock got absolutely clobbered. Adobe did on the news because the valuation, people didn't like it. I'm actually surprised it's getting sold off. I mean, it's a strong addition to the Adobe portfolio. It makes a ton of sense, but I don't think a lot of people like that price. And
Does
I
it
don't know
make a
that.
ton of sense though? Because like I know guys using AI to basically do what you just described and are laying off people that used to do jobs that you're talking about because they can iterate over designs and they don't need the extra person to do the design. They just need someone that can understand how to engineer the code.
Yeah, I really don't think you're on the right track there. Like,
Okay.
there's not.
No, I'm just
Yeah,
saying like in terms of wireframes for a website, right? If you were gonna, would you say the acquisition price was?
20 billion.
20
Right.
billion.
So if I put you in contact with someone who could do what I just described, would you say, oh shit, maybe this company's not worth 20 billion?
No, because it's like the most popular tool for a massive segment of developers.
I understand
Like,
that. I'm saying if I could offer you the same tool that two people can create using AI, would you be interested?
I highly doubt there's an AI that can develop an entire product that does design for other websites. Like, I think you're extending the concept of AI a bit farther than where it is right now.
Let me show you my
Yeah.
friend ChatGPT.
Yeah, indeed. It'll talk to you about what Figma would look like if you were to build it. But
You
it
mean
wouldn't actually build
you
the
mean
product.
Sydney?
Anyway,
Sure, we can go there too.
no, I'm actually surprised it's down. It's honestly, Adobe's probably down because everything's down right now because
We can disagree
PC
on
came in high.
what we can disagree on whether or not it's possible, but I'll say this. It is possible. A company saying that this technology is worth $20 billion that Adobe was going to buy, but is now in a situation where they can't buy it, in my mind, is actually like a blessing in disguise for Adobe.
Well, and that much we agree, I think, because I think a large segment of Adobe ownership didn't really like that price. So I'm surprised it's down, but it's also probably down because the market's down.
The market's selling off, right?
Yeah.
And maybe we could, sorry for cutting you off. Go ahead. I was just going to say, before you chime in, I was just going to say, maybe we could also consider the fact that people bought in because of that fact. But yeah, I digress. Go ahead, Smohan.
Yeah, that could also be true. I like the acquisition. I just didn't like the price. Adobe got hammered pretty hard, and actually, if I remember correctly, I bought a little bit of it for a swing trade, but it's since recovered and then some. Like, very handsome returns from people who bought in after the big, I think it was like 15% drop in Adobe. And I think a lot of people were sitting in Adobe from a valuation perspective, and then when they're going and throwing cash around like that, I think a lot of people thought, "Hey, this is not really the company that I signed up for." But
yeah, typical sell off after an acquisition. Wall Street,
right,
overreacts to it, and that's kind of my thesis. Is okay now that we're wiping the deal off the table. And again, you spoke to the value of the company. I honestly don't know too much about the company they're acquiring, but that's kind of my catalyst, is the reverse side of it. Okay, yeah, maybe the market's selling off today, but investors may cheer if what you're saying is true, that the price tag on it was an overvalued company.
Yeah, might be like a call spread opportunity.
Okay. All right. Thanks for the time, guys.
Yeah, thanks for the discussion. That was an interesting piece of news.
Good morning, everyone.
Morning. What do you got for us?
So I did some research last night. RCI. Let me see. Hold on. RCI Hospitality. Ticker RICK. Long term holding shares.
We've definitely discussed that before. Just funny.
I'm still hung up on this Meg thing, to be honest. I still keep staring at it.
Yeah, I know we talked about Rick's before, but I definitely did some up close and personal research last night. So yeah, fun times.
Did you get your free lap dance with 100 shares?
I did not. I don't have 100 shares yet, but I'm probably going to sell put. And if that's the case, and it does drop, and I get the shares, I'm not going to be too disappointed. So it'll be all right.
So the thing I'm looking at today for just observing how the market moves is basically the spread on cars and Carvana. I think that if you're selling Carvana short, then you're long cars. And so I think that the shakeout of the shorts in Carvana will move cars as well. So I'm considering if there is a run up in Carvana, buying puts on Carvana and getting calls on cars.
Carvana reported yesterday they are dumping in the pre-market. Just so you know.
Yeah, I was just looking at that. They're down 13.5%.
Somehow they added more vending machines last quarter with no cars. Which
My favorite part from their earnings report is basically that their total value relative to the amount of cars that they have left to sell, basically they'll have sold all their cars this year and still have about 5 years of debt to pay off.
Nice.
They're just sweeping up real estate to make their resale value worth it. I mean, I'm just surprised they're still breathing.
So the debt is financed against the real estate, it looks like. And basically, like, this is just a quick glance at the fucking bullshit 10K that got filed. Basically, they have a ton of unsecured debt, and they've leveraged the unsecured debt to the point where the bondholders have entered into agreement so that they can't get squeezed by the family that has controlling stake of Carvana. And so when that bondholder agreement breaks and the family basically gets opened up to litigation, then we'll really see what potentially false material statements the company made. So there's going to be a whole bunch of litigation. So I think Carvana may actually be in the news for another year or two. So that's why I'm worried about a potential run up, even though it is moving down. This is the type of stock where you buy puts for $8 and then it runs to 15 and you're like, well, fuck me.
Well, I'm buying puts for $1.
Right when Latter Day said it's going tanking down, it literally just red candles. It was crazy.
What do those bonds do?
So the bonds are super complicated. Feel free to jump in if you know anything about them.
So the bonds are due in May 1st, 2030. And
there's a bunch of bonds, bro. You're talking probably about one set. There's a shit ton of bonds. The word debt appears 133 times in that 10K.
I'm just talking about the bond with that wasn't back in November, that one they issued. That's the most recent one.
So the interest rate on?
The interest rate is 10%.
Holy fuck.
Yes.
That's generous.
Yeah, it's like 6% on like $6 billion or something, or 10% on $6 billion, something crazy like that.
That whole thing is a grift. It's disgusting. I hope they get sued into oblivion.
It's a grip for sure, but it's a used car sales company. What do you expect?
And the family has said basically like, all right, debtors, try us. And they've said they're going to make it the most painful and litigious,
They literally hired
bankruptcy ever.
lawyers that specialize in manipulating bondholders against each other. That's why the bondholders entered into a pact.
I mean, in their defense, though, if you said, damn it, all my creditors are coming after me, wouldn't you do everything in your power to protect your business? I'm not saying it's right, but if there were
Where
those
do you,
legal avenues to push and push and push, I wouldn't invest in them, though.
Sure, but I guess the real question is, at the end of the day, with the valid argument that you made, not your average, I would say, where's their profit coming? Like, what are they truly doing? I thought they were seizing operations within some respects.
Correct. And the fact that they're opening and buying more vending machines just for the debt or just some kind of play on capital because there's no inventory and they're not really selling. I mean, yeah, it just smells.
Their revenue for car sales suggests that they value the average price of a car about, I think it was like $36,000, right? So they basically need to move 56,000 cars. So that represents about 2% of the annual market cap of used car sales. So the liquidity in the used car market, in terms of how much inventory Carvana has on its balance sheet, is a drop in the bucket of gross annual revenue. But the issue is that their inventory relative to the debt is like a 6-to-1 ratio.
What about that auto auction site that they purchased, the Odessa Auctions or whatever that was?
Oh man, that's in the 10K, and like, yeah, I mean, it's a bunch of like legal jargon and fancy accounting bullshit that they describe to basically discount purchases they made. Basically, bad business decisions get written off in a way that minimizes what is reported as the net loss per share to the common A shareholder. But within the 10K, the actual like attributable loss to shareholders is like $1 billion. So basically, I'm not sure how this resolves, but like I said, I personally think puts on Carvana and calls on cars is the spread.
wait, I only see 3 bonds from Carvana in 2028, 2029, and 2030. But it looks like they're yielding 27% to 32%. Pretty high yield. Very high yield.
That is called a junk bond.
Yeah.
That sounds more like it. I don't know. The 10% sounded a bit low.
No, that's the face value. That's the
Yeah, yields like it's 87 something percent if you think they're going to pay it, which again, that just shows you it's junk.
I mean, this 10K, mark my words, is like Harvard Business Review material. Like, file it in your case studies for later. This shit is gold.
Some financiering, right? Bullshit. Anyone else got any Friday plays? We got 5 minutes before the market's open. Sorry, I don't want to talk about future bankrupt companies anymore.
You got CING. King is looking kind of cool.
Did you guys talk about Square yet? SQ?
AKA Block.
I don't think so. Again, I was a little bit late, but they just had earnings and look like they're up.
Is Cash App part of Block, or is that a separate entity?
Correct.
That's part of Block. Yeah.
Thank you.
Sorry, I fell into a black hole mentally for a second. There was somebody suggesting a play on Block.
The question was it discussed? They had their earnings yesterday. Nobody has said anything about the earnings, but we did confirm that Cash App is part of Block.
Okay, thanks.
Caught up.
That was an awesome recap, you gentlemen. Thank you very much.
Good print, I guess. It was up, double digits pre-market, at least before the PC came in.
Yeah, that's going to be the whole digital payment services basket of companies is going to be in for a hell of a haircut whenever we stop this like irrational spending print.
Yeah. Well, I mean, Cash App is probably a pretty material part of the business, but they do a lot with just small business kind of payment transactions.
Yeah, I was surprised how many people corrected me when I pushed back on Block and Jack Dorsey as a person. Like, he's a CEO who you could have a beer with and go like to Burning Man with, but if you have money in the form of like shares in his company, he doesn't return value to you. But Square, in terms of the swipe thing that we're all familiar with, has a ton of placement. I'm just wondering why the value of the company doesn't reflect that.
I think because Venmo and Vice have taken over, at least from my own pulse of the market, as well as the Cash App. And at one point, we could argue that there was bank transfers at the time, Zelle, but I digress from that because they've had their share of scandals.
Yeah, it has the payment space somewhat has become commoditized, kind of a race to the bottom. So I'm not saying they're not going to make money. It's just, I think the boom days are, if you look at the chart too, it kind of feels like the boom days are done in that share. Yeah, and I think that obviously, sorry, go ahead.
Is up 13%.
That's the one that made no sense.
Yeah, I mean, they did better than their estimates, but they're still like hemorrhaging money like a motherfucker. They're cutting their workforce to try to save on spending. I'm looking at this like, what the fuck is going on?
Yeah, that's like a great target for some puts.
That's what I was thinking.
I don't understand that trend, so maybe I need to do more research.
Hey guys, 1 minute left. Any plays? I know SPY dropped overnight, so.
I mean, do we see there for potential to basically for SPY to drop even more? Because the other day when we had really bad pre-market, it continued to bleed throughout the day.
I think this is the last of the news, and when you have a good January, you expect a bad February, like 60% of the time. So I think you get the last of the correction going through Tuesday, but I would not be surprised if the last of the news coming out led to a decrease in volatility, and after basically UVXY comes down, the market just starts ripping. So going to be using UVXY and SVXY as my guide for how much uncertainty there is going into Monday.
open market's looking worse than pre-market.
Oh, somebody posted an article in the chat. I don't know if you guys talked about Tesla moving its HQ to California and whether that's good or not for the company.
Not the
Have we
HQ. Not the HQ. Just to be clear, it's their engineering headquarters, not the overall
engineering?
headquarters. The
Okay.
overall headquarters is remaining in Austin. But
Do
they
you
want
think
the
that impacts
engineering.
the stock at all?
Not really. They just want to be closer to where the talent and the technology is for the engineering, which makes a lot of sense. Apparently, so the reason they left California to begin with was because the politicians in California were being dickheads. So Elon said, "Screw you guys. I'm leaving. I'm going to Austin." So apparently, California finally realized that, hey, it's a good idea to have Tesla in California. So they came to terms on whatever they were negotiating. So they moved their engineering headquarters back to California.
Yeah, California is dealing with a massive potential fallout from not only the tech sector leaving, but also just the overlap of political regulation in business. And so there's a lot of high value people moving to Florida and Texas that California is trying to get back. So I think that you might see more reports like this in the future.
And that's just engineering, not manufacturing, right?
Correct. Well, their headquarters,
Okay.
yeah.
Do you think with these, I guess they classify as positive news, for let's say the state of California, especially the governor, do you think down the line, Newsom or the state will continue to work with Elon Musk to also bring the manufacturing over to California?
No, you can't just pick up a gigafactory and pop it in California. The gigafactory that they have in Texas is probably going to stay in Texas. Their headquarters is probably going to stay in Texas for the time being. So,
But you don't think Tesla, if they give enough incentive to Elon Musk, you don't think there's going to be like an Amazon Type 2 HQ2 for Tesla?
It can't work in California. It can work the reverse way. You should be looking at what is bullish for Texas and Nevada, because that's where the people are moving to work in these plants.
Speaking of Tesla, somebody called out yesterday ATLX. I guess Tesla, there's rumors going around Tesla might be acquiring them. I bought it yesterday. I'm up 35% on this. I threw a couple dollars at it yesterday. So good looks on that.
what does ATLX do?
Lithium. They mine lithium. I was reading though that it could be another company they're looking at too. I think it's just rumors, but it's going off of it.
It's only up 142% this week.
It's only 110 million market cap. Moving that stock wouldn't take much. So Warner Brothers shot up 2%, 2.5% almost.
I was going to ask if Luce ever got on.
Well, I don't hear him, so I'm going to assume no.
Oh no,
I
he
Wow.
would if he was here. Yeah. Yeah.
It's really ripping. Why?
It's all the momentum from yesterday's call.
Yeah, it's Wingardia Leviosa.
We had a class on Warner Brothers yesterday. It was kind of cool.
I'm just wondering, like,
Maybe
when
Call
will
babies,
Warner
let's
Brothers
print.
be for loose like Meta is for Simple Vice? If we say Warner Brothers enough, will he show up?
Warner Bros. I think you have to
We,
say it like that.
I think in the next earnings call they just gotta say AI and Harry Potter put together.
Luce is actually in the chat, he's just using his alt account right now because he wanted to see how it was going to open. You know, if it opened 1530, keep on the alt.
Next
If it opens
earnings call.
1650, hop
Next
into
earnings
that.
call for Warner Brothers. You can't spell Harry Potter without AI.
Oh, we gotta get him a new flair. Can we let's do House of Slytherin for his flair.
House of Warner Bros.
But honestly, Warner Brothers is sitting on a ton of potential IP that they could just use this Harry Potter video game model on. And I'm thinking Westworld should be next.
Well, they
Right, because
said
Luz was saying Warner Bros. Is not gonna make the same mistake Disney made. So they're definitely gonna utilize their IP.
they mentioned that on the call yesterday. They said that there's going to be several movies from Lord of the Rings coming out in 24, 25. They also said that, like Luce mentioned, that they're expecting to get about $2 billion of revenue from the Hogwarts Legacy game or whatever it's called. And yesterday on the call, they said they've earned 850 million so far.
Oh, Gino, we know you go home and play it every day. Don't act like you don't know the title. He's working now. That's unfair.
Does anybody remember that Lord of the Rings game back in the day for PlayStation? That shit was fire. I could use another one of those.
Yeah, but like every Warner Brothers game since then had the exact same engine, right? I mean, it was like the Batman game was the same. It was all the same, but it was fun at first. It was just the other 8 iterations that kind of got old, right?
Yeah, that Lord of the Rings game. Actually, there were 2 of them. There was 2 Towers, and then Return of the King had on-screen
Yeah,
co-op,
yeah.
and that was the stuff.
Oh, the 2 Towers.
Wait, no, I definitely beat those. Yeah, they were fun. I'm not bashing them. I'm just saying unfortunately, they were copied too much after.
Can I ask you guys a little bit of a technical question?
On Reddit, uninstall and install the app.
Okay, I'll try that just a second. But no, I tried my first options trade yesterday. It was on Warner Brothers, and I just bought 100 shares and I sold a covered call, and the strike is at 1650. Do I have to do anything or push any buttons, or do I just kind of like sit and
Which
wait?
broker is it on?
It's on TD Ameritrade
What's the expiration?
today.
If it doesn't go above 1650, then those covered calls that you sold will expire worthless, and you don't really have to do anything. You just keep the premium that you collected from selling the covered call. If it does go above 1650, then your shares will probably get called away unless you purchase back the covered call.
Okay, so that happens automatically.
No, you have to, if you want to repurchase the covered call that you sold, you have to do that yourself. That's not going to happen automatically. If you want to let go of the shares, you just don't have to do anything at all. That'll happen automatically.
Okay, yeah, that's just what I wanted to understand. I'm kind of in a position with this one where, I bought it at like 15.60. So if I sell it at $1-ish profit in a day, I'm perfectly happy with it. And if it doesn't go off, I'm kind of happy holding the stock long anyway. I just wanted to make sure I didn't screw something up by missing something I didn't understand I needed to do. If there was a button I had to find and push, I wanted to make sure I found and pushed the button.
Not financial advice, but it sounds like you're in a pretty good position so far. And
Yeah,
there's
you're
there's no such thing as a bad profit. So that's your call.
you're in a spot where you can basically do this for like the next 3 weeks. So get used to it.
Yeah, this was the first time I've ever touched options. I wish I understood how these things worked when I was dealing with DraftKings over like the past 8 months. But it seemed like a pretty good one to start with, and yeah, I'm making a little bit of money. I mean, I can spend $100.
Enjoy it while it lasts, buddy.
By the way, if your options are in the money, this is general. You can just right click and it says there exercise shares. That's if you're planning on keeping it though.
He sold covered calls.
Yeah, I sold calls. I didn't buy calls. Okay. I understand that if I wanted to exercise a call, I would have to do something.
That's correct. Usually, like with TD Ameritrade, I think was acquired by Charles Schwab. So
Correct.
with Charles Schwab, you have to call their derivatives desk if you want to exercise an option.
Oh, that's annoying.
It is. I
Loose
agree.
has arrived.
What's up, players?
Loose. How you doing, Loose?
I'm
What's
good.
going on with your boys?
Why the Fed trying to bring WBD down? It's trying to win today. They're bringing it down.
Oh, it's back down again. It's down below the close.
I have another question. Maybe somebody understands this a little better. I was looking at it yesterday, and it closed at like 1574, and then 8 minutes later, there was a huge spike in trade volume, like millions, before the earnings call supposedly released, and it dropped almost 70 cents.
No. Okay. All right. So there's always a massive volume spike on basically all stocks at the close, because that's basically big money rebalancing, ETFs, indices, whatever. The drop came later when they actually announced earnings, and the drop was on literally under 36,000 shares traded volume, which is basically nothing. So those are just algorithms doing their thing. So yeah, that doesn't really mean much either. I don't even know what the numbers had been released at that minute. So that's why the stock price goes all over the place. So none of this is that, mysterious.
Okay, I just wanted to make sure that I understood, because yeah, I've only been tinkering with this stuff since, I don't know, last summer, and if I see something I don't understand, I try and find an answer, and I'd rather be wrong now and know for the rest of my life.
ChatGPT.
Yeah, I'll ask ChatGPT. Perfect. Well,
Or
thank you
fucking
for
Bart.
explaining it to me. I'm always happy to take good advice, especially when someone's going to give it to me for free.
Yes, us unqualified strangers are happy to give you advice that you can learn for the rest of your life.
So latest news, inflation still bad. Apparently the Fed was right, and the markets they're in disbelief.
So I would just like to point out that this is not just strangers on the internet. There are 631 people in this call, which means that I am officially getting diversified advice. That means it's good.
That is true. Wisdom of the crowds is better than one opinion.
I got some swampland for you.
Has anybody got any thoughts on smokeless tobacco? So, it's been very prevalent in places like Norway, Denmark, Scandinavian countries. And it's kind of getting a bit of an uptake over in the UK now. And I imagine, obviously, similar to the Juul, it'll probably kind of melt over into America as well at some point.
Juul's banned in America, and it has been for like.
Oh, it's a ban. Well, yeah. So this is smokeless. A lot of like football players or soccer players in England, in America, I mean, they take this because obviously Juul and vaping is bad for your like lung capacity and things like that. Whereas smokeless tobacco is fairly harmless.
So it's not smokeless tobacco that's banned in America. It's Juul specifically. The federal
when I say smokeless tobacco, I mean snus, which is it's pouches of nicotine pouch
Oh,
of
yeah. Yeah, like
tobacco-free.
chew. Okay.
No,
Yeah.
you don't chew it. It's just in pre-portioned packages.
Yep,
It's
I
like
know what you're talking about.
it's quite a
Like
new thing.
Skoal and yeah. Tobacco is a little complicated in the US because of the FDA. Like they pretty much banned Juul wholesale until they passed some certain regulatory things. And that's why Altria Group departnered with them relatively recently. Personally, I'm a big fan of Altria. I never understand how the tobacco industry is going to survive, but those people just keep making money. They're some of the best at it.
Well, snus in America, I've just googled, and it is sold openly and freely. I believe in the USA.
Juul?
No, snus. So it's
okay.
It's a Scandinavian product, which I think it might have started in Sweden. It's literally it's tobacco free, but it has its pouch of nicotine, and then you put it in your mouth. You don't chew it.
Chew it?
You just, no, it's in a packet, and you just put it under your top lip.
Oh.
But it's like I'm seeing a lot of like it has barely any harmful
Right.
effect.
So it's a tobacco-free substitute for people that used to chew. So it's kind of like Skoal, but without the tobacco.
No, it's for people who are stopping smoking. It's it's nothing to do with people chewing it. Like it's literally an alternative to vaping, but it's becoming a lot more prevalent now in the UK. As I said, a lot of like sports people do it because they can't smoke. Things like this. So
does it live in your gums?
No, it doesn't. It's not meant to have any harmful effects, really. Maybe, obviously, you'd have gum disease, but that would just be from general having anything pushed against your gum. I'd imagine it would cause gum disease over a period of time.
Right.
However,
Well, I just wondered if you knew how it compared to tobacco.
Oh, way more healthy.
Okay, interesting. It's worth knowing. I mean, I do MMA, so a lot of guys don't smoke, but like they used to smoke. So a lot of them chew now, and if it's a product worth looking at, then maybe I'll say something to a couple of the boys at the gym. Luckily, I don't smoke.
Is this infused with nicotine? Like what's
no,
the?
It's nicotine free. It's just no, sorry, it's tobacco free, but it is nicotine. Yeah, so it's basically like a white tobacco free nicotine replacement for smoking and vaping. But it's not meant to really be very harmful at all.
Nicotine is a toxin, so if you're putting nicotine in your system, it's a toxin.
But for people who are trying to quit smoking, it's not about. And everyone knows that. Everyone already knows that. It's a well-known thing already.
And lights for like diet cigarettes. Yeah, no, it's still gonna kill you.
Well, and caffeine is a toxin, but everybody on the planet takes it. And but wouldn't nicotine chewing gum be pretty much the same thing?
Yeah, but nicotine chewing gum is horrible. It's literally horrible.
How is caffeine a toxin? What?
Almost every substance in the world has an acute toxicity level. So almost everything is a toxin depending on how you look at it. Caffeine isn't good for you if you consume it in large quantities because of what it does to your circulatory system. It also gives you heart palpitations and can make your anxiety worse. I've noticed I honestly trade less effectively when I drink too much coffee.
Yeah, you sound like you had a lot of coffee now.
You can hurt yourself if you swallow a bottle full of no dose. You can't hurt yourself significantly. So
that's not
it's not coffee though.
That's
Sorry. Yeah, you'd have to drink gallons and gallons of coffee to harm yourself.
To hit the acute toxicity where you would just drop dead, yeah.
On a complete separate note, I just wanted to say thanks to Luce for the WBD stuff. I bought calls yesterday, sold them on the spike this morning.
I like
I'll be holding a couple thousand shares for the long term.
I like how we're gonna get so many varying results, based on the stock price movement. You're gonna have some people that sold puts. Theta Gang's gonna be like, "Hey, good, 10 cents I made on selling puts." And then some people they're selling calls on the spike. Some people holding shares and they're fine. And then the rest are like, "Loose, my calls are worthless." It's gonna be great.
I bought puts. Thanks.
I bought short puts, long calls. I'm good.
I bought
I'm
puts.
happy.
Thanks.
Any strangle play there?
Sure. I mean, everybody likes a little strangle play.
Well,
Is puts and
You
calls
guys call me?
strangle or
What's up?
straddle?
well, also my Tesla puts, just because I hate Tesla and no other real financial reason.
Revenge trade.
Yeah, I think if the
The best
Warner
kind of
Brothers
trade.
price continues to sink, I'll probably buy more over the next couple of weeks. But if it goes up, I'm just going to take my money and run and be happy with it. So thanks for that one. That was some really good DD on your part, and we appreciate it.
Don't boost his ego.
To be fair, it was really bad, DD, because he didn't mention Warner Brothers, and not a single instance of Warner Brothers in the entire body of the text. So the AI algorithms couldn't pick it up.
I will absolutely boost his ego. It encourages him to do more work for me for free.
That's fair. I'm just saying he's got. I mean, and rightfully so for a janitorial graduate. He has very high intellect.
Oh, you're talking about me? Oh, yeah, I don't
Nope.
give a shit what you think. Yeah, I don't really care. Boost ego. I don't care. I'm doing the work anyways. It's like my play. I'm making money off of it. What do I give a shit if some random dude online likes me? Yeah, I really don't care. Do whatever you like.
I
You hear
mean,
that?
I just,
Careful, Lewis. You might toss your salad.
I have faith in any guy that's willing to sell his body for like a copy of a video game title and a GME share.
Yeah, so that auction actually got canceled because no one came forward with their items. So yeah, next time we hold an auction, I would appreciate you guys had that inventory on hand. We
I'm
appreciate
back
that.
on the market.
Yep, back on the market.
I would set a higher reserve next time too.
We'll try that next time. So Warner Brothers, WBD, looking a little bit spicy, I guess. Negative 47 cents. It almost seems like this is the bottom. Should I buy some shares or should I wait till it goes down to like 14.75?
You gotta wait until the next DD gets posted.
Yeah, 10 minutes ago, it was like $1 higher.
Maybe Smith Muffin can post some DD on some Fight Clubs or some protein shakes or something,
Honestly, I think the best thing I can do for you guys is buy shares in something, and then the price will immediately take a shit. So that's when you guys get in. You let me know what you want to buy, and I'll buy it, and you'll get at least $1 cheaper per share.
Please buy some Tesla shares.
Buy some
Also,
Carvana.
yeah, that too. Did you guys already the China-Russia news?
You're speaking through the blockchain, my guy.
Did we already talk about the China-Russia
Are you
news?
talking
No, we
about the
didn't.
new sanctions and tariffs that have been imposed?
Nah, the whole where China's trying to
The 10-point plan?
yeah, the 12-point plan and all that.
Or yeah, 12-point plan. No, we didn't talk
12-point
about it.
plan.
It's very interesting. But there's a mixed reporting that this is just the public-facing statement, and there's been a separate one issued that is more scathing and points out the flaws within our current economic aid plan. And also, yeah, I'm not going to get into it because there's both sides of the information would suggest that there is the side that is being put out to appease the tensions in the economic market. There's another side that suggests that there's about to be a massive exposure in terms of Ukrainian aid from the U.S. that's going back into U.S. private contracts to the tune of $17 billion, like $17.1 billion of the aid is coming back to the U.S. because it's going into our contractors in the Ukraine. So
bullish
there's a lot to
on
unpack
IPA.
there.
That's good. Coming back to defense companies.
the question would be, does the Chinese statement alleviate tensions and suggest that Russia, China, US, and Ukraine are all at the table on the 1-year anniversary of the war? And so if that gets presented as the public facing sentiment, that's great. But it seems like there's also some behind the scenes, like, hey, this is what we're willing to drop on you guys to show what you guys are doing behind the scenes. So yeah, it could be a situation where on the rosy side, everyone's happy, the war is coming to an end. On the other side, this shit backfires and everyone drops the data they have on the pipeline explosion and the back dealing with the private contractors.
So, the way I read it is Janet Yellen warned China that if they continue to help Russia, then they're going to put sanctions on them, which I don't think they would. But I think China is addicted to the cheap oil now, and they want to negotiate a peace talk so that they can keep getting their cheap oil from Russia without worrying about the U.S. hitting them with sanctions.
Yeah, like
Except they
initially,
announced that they actually were putting in place sanctions today. That was probably about 30 minutes ago. Let me find the specific. Let's see.
Mining, financial. Sorry, I did see it. It was the biggest ones to date.
Yeah, they're a new round of economic sanctions, and then they're also raising tariffs. Sweeping sanctions target more than 200 individuals and entities from multiple countries with ties to Russia, including companies based in Cyprus, Malta, Switzerland, United Arab Emirates, Bulgaria, Czech Republic, British Virgin Islands, and the Bahamas.
yeah, like
Sanctions will also hit
initially I read like initially I thought the news was bullish, but then it also confirms that China and Russia, or it might confirm that China and Russia are on the same side of this thing, which might be bearish. But then on the other side of that, I'm thinking, to your point, the private contractors like Blackwater. I had a friend that used to work for Blackwater. Dude made him just killing going over there for like 6 months at a time in whatever war we were currently fighting. Are any of those private contractors publicly traded?
So the information in terms of who is getting the funding is not out. So I don't know how to answer that question, but yes, some of them are publicly traded.
Well, that's what I mean is like, let's just assume they're all getting money, right? Like if you're a private contractor and we're in any sort of war, which we always seem to be in some sort of a war in some way or another, and we use these private contractors because they, can do the things that we can't openly do. Which ones are privately traded? I just don't know any of the tickers.
Well, I can't specifically just start throwing out shit that I monitor, but I would just say look into news reports with who the administration has worked with in the past, and you can put 2 and 2 together because this administration has been involved in previous wars.
Halliburton, probably one of the ones.
I just came up here to say Boyle is booming. And it's actually related to China and Russia.
Yeah, I had some UNG calls that are also doing well.
Boyle for the win. Somebody mentioned Boyle like 2 days ago, picked up 100 shares, and it's been popping since. So thanks to whoever that was.
It was me. Walking on a frozen lake right now? Sounds like you're about to fall through some ice.
It's solid ice.
I just sold in the money call spreads on Beyond Meat. I just looked at their financials. I updated. I run some cash burn rate calculations on very shitty stocks that are non-profitable, and I think they are very full of shit from what they announced on their earnings call yesterday. And they got about, based on the cash on hand, how much money they need to grow, and their lack of profitability, how much money they're spending. They got about 7 months of capital left. So they're now like in the top 5 on my short list. And yeah, they're going to need raise capital. And they said that they're going to be, I think, free cash flow positive in the second half of this year. And he's complete horseshit because they're currently burning, like, I think their costs are something like 180% of sales. They're going to have to cut costs by something like 400 million. And currently they got a deficit of something like, let's see. Yeah, free cash flow. Yeah, it's about 400 million. So, and their sales were 420 million for last year. So I think they're completely full of shit. I think they're going to issue shares. The shares are popping. I think it's getting squeezed. I think it's a little short squeeze, but I think the stock price is going to go right the hell back down. So I'm selling in the money call spreads.
So fake financials now. First it was meat, now it's financials. Seriously?
yeah. But they literally said they're going to be positive free cash flow in the second half. They're nowhere near that, like nowhere near it. So I think maybe they just said that to try to get the stock price to squeeze. They're going to issue shares. I bet within like a few weeks, they're going to be like, oh, hey, we issued some shares. Sorry about that. Stock price is going to drop.
Is that your timeline on the credit call spread? Few weeks?
For them to issue shares, I wouldn't be surprised if it happened within the next few weeks, or at least they announce they're going to issue shares.
Looks like their short interest percent is 37.48% or 37.38%.
I'm saying, what is the date on those credit call spreads?
Oh, my call spreads. They're monthlies for March. And strike 22.5. Because I don't give a shit. This company's straight up lying. I'm gonna keep shorting them.
37%. It's in the range of a little squeeze for sure.
You said 22 March or 24?
Strike 20 and 22.5. Yeah, for March.
I mean, does anybody actually eat that stuff? I don't know a single person that eats it.
My thoughts on it were, ever since people first started talking about it, people that didn't even eat it were like, I think they could do well. Was the biggest downside risk to Beyond Meat was that people discover Indian food.
That is fucking hilarious. Oh my god.
The food sucks. Like, can we all just agree that Beyond Meat, like, you don't have to say it, like, it sucks. It sucks. It sucks. Like, I don't know how else to put it.
My last ex-wife was a vegetarian, so I've tried many of those like years ago, and like as soon as they went public, I just you can hear it in my voice.
But does it even appeal to vegetarians though? I mean, the vegetarians
vegetarians already have their own food. Like,
yeah, that's the thing. Vegetarians can just go to like the grocery store.
Like,
My
I
whole
feel like
thesis
it's like,
was always.
Go ahead. Sorry.
My whole thesis was always like, why are you trying to sell meat to people who don't want to eat meat? Or trying to sell a meat alternative to people who are like meat eaters are literally the most stubborn fucking people on planet Earth.
Yeah, like,
seriously.
I like meat, but you know, instead of delicious meat, I want to eat something that kind of looks like meat but tastes way worse. Thanks. It reminds me of that meme, the old guy. You know, the old guy with like the frantic smile. You know, y'all know what I'm talking about, like the classic one. Like,
Yeah, I
that's
know.
what I think of when people eat Beyond Meat and they're like, "This is good."
It's hard enough when you're dating a vegetarian to get her to eat meat. Then she tries to get you to eat some of the Beyond shit, and you're just like, God, this relationship is absolutely terrible.
So we would cook meat and the other shit, but a couple times like the meat was bad or we didn't have it, and I would try it, and we would try to lie to her, but we're like, this tastes like shit.
I mean, like, I get it if you don't want to hurt animals, but like, bro, have you met a chicken or a fish? They're total assholes.
Yeah, we eat like seafood all the time, but cows are too precious. You know what I mean?
Humans are animals, and you're hurting yourself by eating Beyond Meat.
Hey, we got too many humans. Maybe, we could shift our eating habits to
Well, not according to Elon.
Soylent Green.
By the way, everyone, Adobe is still absolutely tanking.
Follow Aerosmith's advice. Eat the rich.
Oh my God, you're not kidding. Beyond Meat's up 24%.
Yeah, it's ridiculous.
Yeah, it's
They're
really,
straight
really
up
not
lying
there.
about their forecasts.
Yeah,
Like,
and
there's
really
no
not
BCBY
way.
is up 11%.
So, Ape is going crazy as well.
Many times they stand up and say AI. That's what I'm like wondering.
The meme stocks are back.
So here's the thing. Here's what I will say about Beyond Meat. That's okay, I guess. I think I don't know if they get really lean and they don't have to spend as much money to make their products. Whatever the hell is going on, I don't know why their cost structure is so bad. But like the food, it's not really that good. But the worst part about it is that it's expensive. So you're paying up for something that doesn't taste good. So if it was cheap, people eat McDonald's. I mean, hell, a lot of you white people eat Taco Bell, and that's
Hell
like
yeah,
the
brother.
worst thing you've ever done to society is you support Taco Bell. But anyways, like food can taste like shit and people will eat it as long as it's cheap. But why the hell would you overpay for something that just doesn't taste as good as the alternative?
You
Well,
missed the worst part, though.
And
The
not to
worst part is the
mention,
fake blood.
yeah, I mean, not to mention is it's not healthy. That's the thing is like it was a good idea on paper, but then as soon as everybody realized, oh shit, this thing is like just plastic, silicone, and fiberglass put into to made taste like meat. It's super unhealthy for you.
Yeah,
And
the
then on top
sodium's
of
like 60% in a day. I mean,
Yeah.
it's all salt.
yeah, and on
Yeah,
top of that,
sodium.
humans are not meant to be vegetarians. All herbivore animals have like 3 or 4 stomachs. We only have one.
On some earning plays, Li, what is it? It's like Li Auto. It's like a Chinese company, EV. They report
Lee.
earnings on Monday pre-market. I just wanted to know if you guys had any thoughts on it. It should be a high IV play. I heard somebody say they were playing a strangle. I just didn't catch exactly what it was. It was earlier.
Oh no, I meant buying Strangles, and that was for Warner Bros.
Okay. Does anybody have any info on Li Auto? Like I think last quarter, they reported earnings and then they like jumped up a bunch, but then like the results when market opened were a lot different. So
Aren't they that van company?
the what?
Lee Auto? Isn't that van company?
No, they're like a bad copy of Neo. It's like Mitsubishi versus Honda. Like if Neo is Honda, Lee is Mitsubishi.
Regarding that, I usually take the whole sector into account, not just an individual company. So if I see the auto industry having poor earnings, I just don't touch it.
I mean, you probably want to look towards BYD realistically if you want a direct comparative review.
Was there somebody here bullish on Honda or something?
No, but I think we were talking about Ford a few days ago.
Ford is trash.
Yeah, and how their CEO said EV is the future for Ford, and he's going to keep getting into that EV market for Ford.
No, Ford's supply chain setup is complete trash. You can't even buy like a battery for a Ford Fusion. Their profit margins are horrendous.
There's another EV company that's much more profitable than Ford, is a much bigger EV auto manufacturer, far less debt, much better valuation, very high free cash flow yield, and is still trading under price to book value even after like a 60% run up over the past 3 months.
And they're about to come out with a new electric truck that's pretty sweet.
Yeah, the Ram Electric is looking nice.
By the way, going back to the Beyond Meat, recently, McDonald's just set out that they're planning on plant-based chicken nuggets starting in, is it Germany? They're starting to roll that out.
Germany? Oh, they're gonna taint the good.
Yeah,
like,
I'll put the
Germany has
article.
good McDonald's.
Articles in the chat.
I'm about to go Citron on Beyond Meat and write a whole report and be like, title it like Beyond Meat's executives are lying to you and they eat meat.
Please title the report "Beyond My Nuts."
Well, the market cap for Beyond Meat is 1.36 billion, which I think that's why it's up so much. Like
That is a lot of chickpeas.
It's a lot, but then like relative to the overall market, it really isn't. Like there's a bunch of $20 billion stocks. So
Oh yeah, about 1.4 billion. Yeah.
Okay, so is anybody considering buying Alibaba at this price?
Only people every single day on this talk. I swear they bring up Alibaba like every day, and somebody asks the same question.
Well, from what I understand, their earnings were really, really good, shockingly good, and it's down bigly.
Did I hear someone say a Chinese company had shockingly good earnings? Wow, that's almost like those should totally never be trusted.
Yeah, China sketches me out.
Wait,
What was that Chinese company that went up to like $1,000 per share?
HKD, goddammit.
HKD? Yeah.
HKD.
Who's calling me?
They had the 12 hardest working employees in the entire world for about 2 days.
Well, and basically any IPO that came from Hong Kong after that did the same thing.
All right, somebody just wanted to chant my name, I guess.
Oh, it was me. My bad. I was gonna ask. It's been a while since I've seen you, like on the chats, right?
I was here yesterday.
And last week too.
Like before that, like I used
the
to
week
be on
before.
for a while. I just want to know your plays that you've been making. I don't know. I'm just curious.
Did I make so many plays?
But
what kind
the
of
ones
plays?
that are like the larger, like on the larger side of your account.
Stellantis is my favorite deep value play right now, and I've been saying it 70 years. Stellantis is
Stellantis?
Markets are sleeping on Stellantis. Yeah, ticker is STLA. It's literally a growth EV stock that is priced below book value. Zero liquidity issues, no net debt. The valuation is like a small fraction of Tesla, but I think they sold. I don't want to mess up my numbers, but the number of EVs that they sold, they're like one of the top 3 for sure in the world. They're starting to outpace Volkswagen, so they're catching up to Volkswagen. Volkswagen has a lot of debt, mind you. Profitability is not as good. Stellantis is just like I don't get why the markets don't value this thing like at least 5 times higher. So that's my favorite play.
Are
right
you just holding shares? I noticed it's not that expensive.
Holding shares. I have calls, leaps. I'm selling puts. Yeah, all sorts of things, and I'm making good money
I
on it.
think it's also important to note that Stellantis is the owner of Chrysler, correct?
Yeah, Chrysler, Peugeot, Fiat, or Fiat Chrysler, Dodge Ram, or just Dodge, Jeep. Yeah, they got a lot of brands.
Just Ram. Ram is a separate brand. But
and also Ferrari. Don't forget Ferrari.
No,
Yeah,
they do not own Ferrari.
I bought leaps on those when you first mentioned it. Those are already up 124%.
kind of on subject, Ford F-150 stopped the battery production for another week. It just came across as breaking news, so they're still having issues. And yeah, Ferrari is race. They have their own ticker, and they were
Yeah.
the best automotive stock last year, actually.
I get they have their own ticker, but have you ever seen the inside of a Maserati? It's full of Chrysler parts.
And that's the Mach E battery, right? That's having
Maseratis are
problems.
just overpriced pieces
for
of
the
shit, honestly.
for the Ford F-150, correct? Yes.
Okay.
Honestly, man, if you asked about my plays like a month ago, maybe 2 months ago, you would have had a lot of really nice plays. Because there was AE, there was Mesa. I just announced DSX. Well, I don't know if I said that here, but just like a week or so ago. And DSX already went on like a 20% rally. I don't know. JD looks interesting here. I'm glad Intel cut the dividend, but I'm not in a rush to own shares of Intel.
In the
Altria looks
relation,
nice.
in relation to your Stellantis, you can actually get 20 calls for 25% each at the moment for June 16th.
Yeah, the options are pretty damn cheap compared to how much
Really
the
cheap.
price has moved. Yeah, so usually you see a stock price that's moved, 40, 50, 60% in 3 months. The options are going to be really expensive, but that's not the case with Stellantis.
Yeah,
So I think the market's probably mispricing
30.1%.
this one.
30.1% IV. So no worry about IV crush or anything really.
Yeah. Palo Alto was a good one. I'm still holding that. I have calls as well. And WBD is looking nice.
Were you also talking about ESTA? ESTA?
I did. That was a very small play because management is, I guess, I don't know what they want to do, and I think they have a big, like their ownership is kind of wonky, and basically that company, like the people who are going to get by far the best deal of that, of owning shares of that company would be like one of the inside investors, but not even the people that run the company. So it's kind of weird. They had like a massive percentage of ownership. They were just basically getting like really well-priced preferred stock, and then exercising it or getting shares, or converting them rather, and getting shares, and then they were selling. So I don't know what's going on there. It's a little bit weird, but the valuation is really low. So
Yeah, I've had it on my watch list for a while, and it is a weird ass ticker because sometimes it just doesn't go along with any of the other. Like it doesn't move with SPY at all. It really does do its own thing.
yeah, so I guess so the valuation is there for sure. Looks like it's trading at about 0.7 price to book value. Free cash flow yield going forward is looking at about 17%, which is pretty nice. I do have one or two oil and gas plays that have higher free cash flow yields, but that's still pretty high. Management has been somewhat acquisitive. They've been making acquisitions, but they're also trying to reduce their debt on a forward basis. Debt to EBITDA should be about 1 times. For context, anybody doesn't know, debt to EBITDA higher than 3 times would be considered high by the industry, and 5 times just like the company's in distress, basically. They might pay a dividend in 2023. At least that's what RBC is saying, Royal Bank of Canada. Some of the risks, the NCAP Investments and Warburg Pincus are the big insiders. They used to own 43% of all outstanding shares. There was recently a sell. Now they have a combined ownership of about 36%. That was as of maybe like a month ago. I haven't checked to see if that's changed. Another risk is that they announced that they were shifting further to natural gas sales versus oil, which I thought was a pretty poor play. Like maybe before, all this craziness, as soon as the war started, they definitely could have made that move, and I think investors would have really liked it. But now it's kind of like they're chasing the falling price. So I'm not really a fan of that part. And now, as of, I guess this was like a few months ago, nat gas sales were about 40% of total revenue. LNG was about 20%. So I would have wanted to see that go the complete other direction. More oil versus nat gas.
What's the ticker? What ticker are you talking about?
ESTE. And I'm just kind of
Oh
going
no,
through
I
the
was talking about
risks.
ESTA.
Oh, god damn it.
They're like, it was like some Brazilian plastic surgery play.
Oh, I don't know anything about that.
Sorry, dude.
What is the butt lift to boob job ratio then?
What are we doing? I don't care.
Is somebody talk to someone? Hey, host. Do your job, hosts. Mute people.
Yeah, getting right on it. Getting right on it. These people talking when they shouldn't be.
Luce, in relation to the ESTA ticker. So,
yeah,
can you just tell me a bit more about that? Because they seem to have a really high net income, like percentage-wise to their revenue. So, is that a kind of similar sort of thing throughout their industry?
Yeah, you'll see that across a lot of upstream companies. They're oil and gas upstream, and it's highly cyclical. So, for example, look at natural gas. So those margins are going to fall as the prices of natural gas has, and yeah. So overall, I think if you were in natural gas before, shortly you made that move, or you're already there, at the start of the Russia-Ukraine war, it was a very good play. If you're getting into natural gas now, I think it's it's pretty risky. I think a lot of economists expect natural gas prices to go back up eventually, but it's just like I don't think now is the best time to get in natural gas.
But in terms of
from a
eventually,
company's
they're
perspective.
saying like 3.5 years, right?
Well, no, I think like by year end, because look at all the winter storms we're getting. So a couple things there. I think the forecast like for weather is all over the place, and typically you don't necessarily need like a very cold winter or a very hot summer for natural gas prices for demand for natural gas to be high. What's good enough is if you have these spikes, such as what we've been having. Now, the demand might still be like in terms of units, millions of BTUs required. That could still be lower than if you had a very cold winter or very hot summer, right? However, what tends to happen is inventory levels get all wonky. So, say the forecasts are we're gonna have very mild summer, very mild, no big deal, and then natural gas companies, all the companies that need to build up inventories, they say, okay, got it. And they base their inventories off that forecast. Suddenly you get a big spike, right? Now, if it's bad enough, those companies might have to like hustle to get their hands on a lot more inventory. And that could cause natural gas prices to spike. You could see this very similar to like a short squeeze, basically. Like shorts, like frantically trying to cover. That's basically these natural gas companies, or really any utilities companies, with the similar pattern in commodity prices. But that's essentially what happens whenever you see a spike, like suddenly a sudden heat wave or a sudden blizzard, like apparently what you're seeing in California now, which is totally unexpected. So when you see those spikes in weather, up or down, whatever, that's when you see natural gas prices really moving up. So that could happen basically at any time, and I think it will continue to happen for this year. And over time, I think that's going to become somewhat of a norm. And companies are going to say, we can't just hold inventory based on mild forecasts because these spikes in weather in the climate are so frequent. So the nat gas prices should come up gradually over time throughout the year. In addition to that, other commodities have become very expensive relative to natural gas. So at some point, companies have to say, wait a second, like why would I use coal or these other commodities to power for power generation when natural gas is so damn cheap? So at some point, the supply and demand, like that curve has to kick in. So prices are low, and I think it will. It's probably going to be somewhat gradual though over the year.
And just
Yeah, and
sentiment. Oh, sorry, just real quick. My family owns land, and I've talked about this before. My background is somewhat in energy. We're leaving the gas in the ground right now, so I kind of want to agree. I wanted to echo your sentiment, but it will come back up, and you can just kind of pump it again. But also, yeah, you're right. The way that coal has been going with the erratic weather, that's someone to talk about that before. But anyhow, I'm done. Go ahead, gentlemen.
So with the demand curve being artificially stabilized, what does that say for the effects of the war? For example, China offering a 12-point plan for the war to basically come to an end could end the artificial deflation of the price and allow the natural supply and demand to return.
I wouldn't call this artificial deflation. I mean, this is just supply and demand. So you had demand pull from the war. Natural gas prices soared. All countries loaded up on natural gas and LNG. So now that they're loaded up, inventory is at all-time high. Of course, the price is going to fall. So I wouldn't call it artificial. But
wasn't the price being? I guess some have made the argument that the administration is stabilizing the price.
Yeah, there's like the governments of the countries were capping prices and usage and doing all this other stuff and getting like loans and
that was much higher than where it's at right now.
So they were getting it cheap. They were getting it cheap now, and then they're gonna have to like pay it back later. So I think when natural gas goes back up, it's going to be staying back up as they have to pay off like the debt and pay back for getting it so cheap.
I think my point is you had massive demand pool, right? So demand pool is basically what demand would have existed in the future. It gets pulled up to the present, right? And you saw that across basically all sectors through COVID, right? Or almost all sectors. So that's why a lot of sales estimates, earnings estimates are being revised downward. Earnings are just going down because all the demand, it was pulled forward through COVID, 2020, 2021. So that's all that happened with natural gas. There are, we'll say, like consequences of that, right? Prices spiking. They're going to limit prices at some point. Those were much higher than where they are now. So really, this is just kind of typical supply and demand economics of a commodity. So that's why I would say like it's not artificial.
I'm
Going
pushing
forward,
back against
they should
that.
come up.
I'm pushing back against that strongly because of what is going on with the war in Ukraine, and I think that you'll find enough reporting.
What are you pushing back against? The idea that it's artificial, or the idea that prices are going up? Because I don't care about the artificial argument.
I'm saying that you're saying this is natural supply and demand, which I disagree with.
This is what happens with commodities. Like look at the business cycle. Look at the supply and demand curves over the past 30, 50 years.
I think
this is not atypical.
I think what Luce is trying to say is the reason why doesn't matter. You just follow the supply and demand, right?
Yeah, and it kind of sounds like a straw man argument. Like if you want to be right on something, cool, go for it. You're right. I don't care. But what I'm saying is prices are going back up. That's the whole point of what I thought that was the point of this discussion.
And to go,
if the war continues, will prices have natural supply and demand feeding into the pricing, or will it be affected by governments entering into agreements to severely affect the Russian ability to sell gas on the open market?
The global economy is weaned off of Russia like a lot already. So I don't think Russia has as big of a presence in the natural gas market as you think it does anymore. And again, I think supply and demand is reflecting that. Prices are reflecting that. Why would prices go down so low if there's still this panic that Russia could just, cut off supply for the rest of the world? It doesn't make any sense.
There was a framing of that.
Inventory levels for the rest of the globe, those have gone way up.
So the framing that I'm not pushing back. I appreciate you, engaging in the discussion. I'm just presenting other framings of the argument. Is that There was artificial pricing. If the war ends, there won't be artificial pricing. That's one thing. We can set that aside. We've discussed that. The second thing would be the amount of storage. The reason why there was speculation about the amount of storage was there was a lot of reporting like this is going to be a bad winter for Europe. And then there's reporting now that, hey, it wasn't as bad as we thought it was going to be.
Well, it's just to add an extra side of this. There's also going to be new uses for natural gas. I did a little research on it, and they're actually figuring out how to blend it with hydrogen at like an 80-20, 20-80 ratio to get more efficiency out of other sources of fuel. So natural gas has other uses that are going to be involved in the next few years.
Fertilizer.
I don't think the Russia thing really affects the supply and demand as much as you think it does, because they're just gonna sell all their gas to China, and
Yeah,
China's
I guess
gonna
for me,
not
I'm
buy
uninformed.
gas from other suppliers.
Like the news that has been reported and discussed in the last like 3 months in this specific chat has been the pipeline exploding, boiling cold, and artificial price stability. So I'm glad you guys shared your thoughts. I'm not trying to win any arguments, just engaging in discussion.
The way I'm playing it is the shipping of the gas, because the U.S. is a big supplier and we're sending a lot over to Europe right now because they can't get anything from Russia.
Yeah, and Qatar is also a big player in that.
Yeah, when this whole thing started, everybody wanted to play oil, and I was like, don't do it. Don't try and go long on that. Don't do the commodity. Try and find something else.
Speaking of things going back up, looks like Warner Brothers Discovery is on its way up.
I love it. Also, I sold Strangles on Wayfair. IV was really high after earnings, and they plummeted something like 25%, something like that. But yeah, it's a really nice premium of selling Strangles. Strike 30 and Strike 46, expiring March.
The way things are looking, does it look like we might have an afternoon rally here.
Wait, what do you mean? Nasdaq's down over 2%. Yeah, I don't think it'll flip right now.
Not a huge rally. Just I don't know. You think the SPY will be over 390 or 396 today? Everyone just kind of chills out after all this news came out, and they're like, "Oh, okay." And
well, 396 is like, what is that now? 395?
394 and change, I think.
I mean, sure. Guess it could, but the markets. I mean, look at the market's been trading recently. They're just up and down, up and down. I think the markets need to. I think this was like highly predictable because the markets were getting ahead of themselves. And they were saying, the Fed was saying, Powell was saying, like, inflation's still too high. We're not going to slow down. We're not raising rates till 2024. And the markets were literally pricing in 2 rate decreases by year end. So there was massive like dissent between the markets and what Powell was saying. Now suddenly it's like, oh wait, I guess Pow Pow was right. So I'm like, yeah, what the hell's wrong with you? Like this is, this was very much expected. Earnings are going down. PE, S&P PE is going up. So I don't. Maybe the markets will just tick up today, but yeah, I think this makes a lot of sense. Mark's just kind of dropping.
Because beyond meat put options are a little bit too rich for my blood.
Yeah, that's why I'm selling call spreads. Back in the day when I had the biggest balls of all, I would just sell naked calls. But yeah, those can really hurt when you're wrong. So now it just, if I think it's like a stock like this and it's squeezing and I'm like, okay, this is definite bullshit. I have a lot of conviction that the stock price is going to come down. Then I'll sell in the money call spreads because I guess the payout is it becomes more favorable than selling out of the money call spreads.
Luce, are there any earnings you're looking at next week that you're thinking about playing? Anything that just tickles your fancy?
I'd have to look at the calendar. Do you know off the top of your head if there are any big ones?
No, I saw Berkshire's on Monday, but not a lot of people probably own that here.
I have calls, leaps on Berkshire, but that's it. Oh, I see we got Occidental Monday after hours. So yeah, I'm in Occidental. That's a very long-term hold for me. I'd be very curious to see what they say. But I think it's looking pretty good for them. I know oil prices have come down a bit, but frankly, unless oil really settles below $70 a barrel, all of these oil and gas companies, the upstream companies, the free cash flow is just so freaking high. Like yields are still like above 10%, around 15% for a lot of these companies. And you look at a lot of other stocks and other sectors, free cash flow yields are like 5%. And they're decreasing.
Well, it's funny, the whole industry as a whole kind of found religion after the last, 20 years of let's just buy and expand, and explore. They really did in the last 5 years, which is kind of funny, right?
Yeah, and if you look at, a lot of people point to like the massive rally that oil and gas has had over the past few years, and they say, okay, no, it's time for a correction. It's got to come back down, whatever. Zoom out, take a look at the past like 10 years, 20 years. And oil and gas, the entire energy sector has been such a massive laggard. And if you zoom out, you're like, you know what? Yeah, it has come up a lot, but it could run a lot more if these this level of cash flow is maintained.
Yeah, there's a lot of interesting little mechanics I've seen at play here with oil and gas. It's a big one that I follow just because it's secure and it's cyclical. But a decade ago, when I first entered the job market doing engineering for oil and gas companies, the OPEC nations were shoving a ton of oil into the market to try and drive those guys out of business. And they kept putting in capital, kept enduring and surviving and expanding. And now a lot of those Middle Eastern royal families are pulling their money out of oil and gas, going into like tech and gaming and all kinds of other weird places, which has people freaking out, but that's a different subject. But now those oil companies are looking to get the returns on their investments from the expanding that you were talking about, because they went grow, 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 grow. Now they have all this stuff. And I just think it's kind of fortunate timing with the whole Russia situation, tinkering with the oil market and really letting them come online now. I agree that there's more room up than there is likelihood of down.
What I think is hilarious for the entire oil and gas sector is, a lot of like the execs, they cried about profits, and now they're saying like, oh, we have to be cautious because look what happened over the past decade, and and margins were too low, we weren't making any money, so now we have to protect our profits, right? And there's this whole like hoopla, like, oh, leave oil and gas alone, you know? Well, they did it. They fucking did it to themselves, and it was with hydraulic fracturing because that was originally used for natural gas. That was the main purpose. And then, wouldn't you know, some savvy guy on Wall Street said, "Hey, we could use hydraulic fracturing. We could apply that to oil, to the production of oil." They did that, and oil and gas, big oil and gas, like flooded the market. And they said, we're all going to do that. They flooded the Permian market, Eagle Ford, like, you know, all over Texas became like crazy with oil, and supply shot up. And it was because of hydraulic fracturing. It's because the entire market adopted it. That was Big Oil's decision. That wasn't, nobody forced them to do that. So they kind of did it to themselves. But now the market's finally stabilizing. And I mean, the war made it worse. Now we're, you know, in supply shortage. So I guess they're good to go now, but they probably learned their lesson.
Yeah, part of it too was like they needed a couple of technological things to catch up, because with hydraulic fracturing, they always intended to get the oil, because everywhere that you have gas, you have oil. It's just once the pressure changes, it goes into a liquid phase rather than a gas phase. The oil is just a little bit deeper, so you have to be able to drill a little deeper. That takes a little bit of a stronger engine and a little bit better materials. I think it was some improvements in metals, because like if you've ever worked on a drill crew of any kind, like you can only twist the drill so far before like the metal just warps at one end or another. Yeah. Yeah. Well, I wish
So,
I
yeah,
was long enough to hear that complaint.
It was good. Like, I mean, hydraulic fracturing, like, it definitely has its, you know, flaws, right? But it was definitely, the technological advancement was more or less necessary, but leave it to the markets and like a free market to say, hey, we can make a shit ton of money on that, and everyone floods it. You know what I mean? So like, if it was more controlled, then it wouldn't have been as bad. But how are you going to control a free capitalist market, right? So, you know, everybody's like rushing. You know, it was like a gold rush for oil and gas. So, so yeah, if they were more reserved, you know, they wouldn't have crashed their own market. But yeah, hey, that's how it goes.
If you want something cool, just to kind of add to your little toolbox of understanding how things move in relation to each other, wherever you get new development in fracking, at least in westernized countries with real environmental regulations, you're also going to see an uptick in improvements in water treatment plant systems. So if you ever look into like calls and puts on that kinds of thing, wherever you see gas development, one of the biggest byproducts is the water. You have to extract all of that groundwater that's in your way, and it's contaminated. A lot of it is just like the rare earth stuff that occurs at those depths, and you can't just discharge it to the ground, and it's expensive as shit to truck it. So usually
I just wanted to say, I'm pretty sure my reserve joke was too deep cut for anyone to understand.
Yeah, I missed it.
I got it.
No, I totally got it.
And now here
it was funny.
Everyone, I was just saying, it wasn't funny. It's okay.
Did you want me to laugh? I mean, sorry, I thought it was kind of obvious.
No, I wanted
You
you to
could kind of
cry.
laugh through the emoji. No, what I thought your ego was good, Luz. Anyhow, back to gas.
Yeah, but you know, laughing's good, isn't it? I thought
Yeah,
people like to laugh.
I was just on mute, but it was pretty funny.
Yeah,
No,
mine
it wasn't
too.
funny. It's okay. It wasn't funny. I'll admit it wasn't funny.
Yeah, but the TLDR of it is anywhere you get new fracking, they've realized it's cheaper to make treatment plants to treat the water. So if you ever deal with stocks in like the publicly traded utility companies, like Aqua, for example, it's worth a look.
Yeah, I agree. YouPorn is my preferred porn site. Wait, earnings? That's what we're talking about. Earnings. Workday is reporting after hours Monday. I'm very curious about Workday. And I recently, I've been homeless, living in a dumpster behind Wendy's for a long time. But I recently discovered how Workday like actually works. Like I had no idea because I haven't been in the corporate world forever. But Workday is a pretty good site. I didn't realize so many companies use it. And I asked a lot of friends. They're like, "Yeah, my company uses Workday." So that seems like a company that's going to be around for a very long time. I think they're overvalued. But look at all tech across the board, software as a service. But that
Did
is
they
one of those
just
companies
do a
I think
bunch of
they're going to last
layoffs,
forever.
Bruce?
Huh?
Didn't Workday just lay off a bunch of people?
I'm sure they did. Every tech company's doing it. So yeah, I'm curious about Workday. Uh, Zoom is reporting after hours. Zoom is a strange company that has so much cash they'll never die, but I don't know how they're gonna continue to exist.
One of your least favorites, Fubu, is reporting on Monday.
You mean Fubo?
Sorry.
Yeah, Fubu is a good brand. It's a good brand.
Yeah, right.
And then one that I've been watching, Viatris, VTRS, a pharmaceutical company. I think they deal mostly in foreign countries. Someone correct me if I'm wrong, but they seem to be trading at a value. But I don't know much about them.
So yeah, it looks like Workday did do a bunch of layoffs along with the general tech sector 3 weeks ago. But much like the other tech layoffs, they're facing litigation right now. So some of that will be in the news. But yeah, maybe it's a good sign that they're willing to cut staff and preserve the rate they're burning cash.
I think they're profitable, aren't they?
I haven't looked. I just know, I remember I have a bunch of friends that work in tech. So like on LinkedIn, I see my friends complaining about getting fired every week. And I'm pretty sure I remember seeing a bunch of them crying about getting fired from Workday. So I was trying to remember how recently that was, but I also see that there's a lawsuit because apparently they were using AI for their hiring process and their screening tool had a bias in it that may have discriminated against candidates.
Yeah. Workday definitely.
Shit gonna happen.
So they are profitable, at least cash from operations. They're quite profitable. The valuation is pretty high. But I think that this is an example of a company that kind of followed the growth at any cost strategy through COVID, and it worked. It seemed to have worked really well, but they found their footing in terms of profitability, which not a lot of these other high growing tech stocks or just stocks in general, stocks that recently IPO'd can say for themselves. Like DraftKings is one of them. Like they're still not profitable. Stock price is starting to come back up, but they didn't find their footing with profitability. So if you follow that growth at any cost strategy through a period of free money, you still needed to figure out how to be profitable. If you didn't, those companies I think are kind of screwed, and they don't have a choice. They're going to have to lay off a lot of people. So the way I see it, Workday is just kind of doing what they need to do. It doesn't mean it's a great buy, but I think the company is probably solid for the very long term.
But in DraftKings case, they said the quiet part out loud. They said, "Hey, we know we're not profitable, so what we're going to do is reduce the amount that we're spending on marketing because we're going for customer acquisition. We're done trying to win that race. We think we're, top 2 in terms of market share. So now we're going to focus on profitability." What is Workday putting out there? Because what I see is that they're trying to say, hey, our layoffs weren't the result of being too aggressive. We didn't overhire.
I think the difference, they're two different kind of companies. If you look at Workday, they actually are somewhat of a disinflationary force for companies. They kind of add value. And this is the unfortunate part about automation, but you can fire HR people and use Workday. You don't need as many people because you're doing that. So I think it's a little different. They're probably cost cutting where they actually have a profitable business. So I think it's a little different.
Yeah, look, I mean, at the end of the day, it's like, you got to look at financials. Look at what Beyond Meat just said. Apparently, they're going to cut costs by 50% within the next 5 months. You know what I mean? So it's like it's basically a lie. Like I wish I could travel in the future and come back and be like, okay, guys, it was totally a lie. But DraftKings, Workday, DraftKings, whatever company it is, I'm looking at financials. not at what the executives are saying and what seems reasonable. If DraftKings was close to profitability on a cash from operations basis and they were winning market share and they said, okay, we can pare it back, then I'd be like, okay, interesting. This company's going profitable, but they're not even close. They were actually losing market share over the past quarter or so. So that's something they didn't talk about that. And they said, yeah, we don't have to.
Who are you seeing
we're
them
winning.
losing market share to?
So there was a chart I looked at a while back. It had MGM, DraftKings,
Okay.
several others. I want to say there were like 5 or 6. What's that?
FanDuel is
Yeah.
the
Oh
other
yeah,
big one.
FanDuel. Yeah. Yeah, that's like the other big one. But
Yeah, they're European.
yeah. So DraftKings is one of the big ones. DraftKings, FanDuel, MGM. They're some of the big ones. MGM's a little smaller, but FanDuel and DraftKings, I think, are the biggest. I think Caesars is there. But
Barstool too.
Yeah, Barstool.
Well, that's Penn.
There was probably like one
That's Penn
other
Gaming.
significant one. Yeah, because I think there were about 6 on that chart. But DraftKings, it showed the market share over time. DraftKings was starting to lose market share. They were doing well at first, but then they were starting to lose. And I think, I want to say maybe it was MGM. I can't remember. MGM stopped spending on advertising or marketing. They cut back in a big way, but they maintained their market share. DraftKings, on the other hand, was still increasing their spend, and they were starting to lose it. So, based on those charts, DraftKings was definitely losing their momentum. Now, I don't think they have a choice, and they don't have the capital. DraftKings is pretty high on my short list in terms of cash burn rate. So I know they don't have the capital to keep up with the big dogs. And the fact is, the race that they're trying to win is like lobbying governments to make online gambling legal. But they've reached maybe like a handful of states so far. I'm not sure.
Yeah, we can discuss that.
They hit most of them, but they got rebuffed in California in November, and that was a big setback. Then FanDuel had like an on-ballot measure. I thought for sure it was going to pass, and it just got hammered like 90%.
That's not. That wasn't against DraftKings. That was against
right.
the entire market.
Here's my point.
Legalizing online betting.
It's going to cost a ton of money to make online gambling legal throughout the U.S., right? Because lobbying, because governments, politicians want their cut, whatever the case is, right? It's going to cost a ton of money. DraftKings doesn't have that much money. They can barely make it from the handful of states that they've been spending money on to lobby and make it legal there. So other companies have way more capital. So that's what I'd be worried about if I was bullish on DraftKings, is the fact that they have a high cash burn rate. They're going to have to, maybe they make it, right? And maybe they can raise capital, but it's not going to be debt. It's going to be share dilution. And that's not speculation. That's like math. And you look at any other stock like this, like the case studies are, near infinite, right? So that's what I would be worried about with DraftKings, is that they will have to dilute the shareholders. They could take on some debt, but the fact is, from a lender's perspective, a lender wants to look at the company's financials, their liquidity, and say, okay, should you be putting this risk on us or on your shareholders? And if the liquidity isn't that bad, and they're still working towards profitability, stuff like that, they're probably going to say you need to put this risk on your shareholders, i.e., you need to dilute, you need to issue stock. So DraftKings is in that position right now. So I think risk of stock dilution is very high, especially when they have a cash burn rate of just under a year. And the fact is, they are losing momentum. So they could still lose this race before they even become profitable.
I think those are all good points. Going into their earnings, I was bearish, especially we talked about companies going into the Super Bowl that are in nascent industries overspending to advertise. And so I was bearish when they had their earnings call and said, we want to start cutting marketing spending. And then the stock rallied and all these analysts revised their price targets towards the 30s. I took a second look. So I'm just saying that I think you make great points, but I think that they still understand that they can say things like, hey, we'll reduce marketing spending too to compete with MGM. And I think that their product is far better than MGM or Caesars.
The other interesting thing with DraftKings that helps them a little bit is they have online gaming as well as just sports betting. They've kind of quietly diversified their business. That was part of that gold nugget pickup. I'm in an interesting position with them where, like, I have a good idea of when their stock is cheap for the moment, and I buy it, and once it goes up, I sell it completely out. But I'm not super bullish on them for the long term. I think that beating two already big, strong, established like institutions in FanDuel, who is probably the biggest online betting in the world, and then MGM, like that's a colossal task if you don't have a game-changing edge.
William Hill Caesars is larger in terms of
is it?
In terms of the actual interaction with the user. And DraftKings is up there, but that's taken into account brick and mortar.
Yeah, they're up there, and the trick is when you're trying to get subscribers, I feel like the venerables do have a little bit of an advantage they don't have to pay for. Like DraftKings has to pay for all of the exposure they have. Caesars and MGM have been around since your grandfather was, losing paychecks at the Gold Nugget before his grandma divorced him. Everybody knows who those people are already, and it's not impossible to beat them, but it's going to be tough to beat them. And I think that if DraftKings is going to beat them, they're going to need like a game changer in terms of tech or like something really new. And I haven't seen it yet. So I think
they're like,
aren't
they just they don't have the functioning costs of casinos.
True.
Like
they didn't have that in COVID for sure.
They probably aren't profitable because the people at the top are acting like a bunch of douchebags and flying around the world and buying expensive shit and just taking all the money.
They're not profitable just because they're burning a crazy amount in advertising.
Yeah, and that's what they're saying. They're saying that they're getting feedback that it's actually making it. All right, think about it from this way. You see a ton of advertisements for the product, right? Now you feel worse about using it because it's oversaturated to the point where like you can't watch anything without seeing 5 different advertisements. So they're saying, why don't we scale back? Because these people are still going to use it regardless. We've put ourselves out there. Everybody knows it's legal. They know where to find us at this point. So let's put our money somewhere else.
Okay, so I posted a link. It's not, the data's a bit dated. It's from July last year, but I think it tells a pretty good story. It talks about the market share of the online gambling companies. So I know, the gentleman, you said you think DraftKings is like better, but the fact is they were losing market share. So the markets disagree. The people disagree. FanDuel was kicking their ass last year. And the other companies.
What was last year's revenue?
Yellow. MGM increased market share. And MGM was the one that cut back on advertising. So, and MGM has a pretty small portion of that pie. But FanDuel went from something like low 20% market share in January last year. And then in May, it was up at 60, close to 60. DraftKings, in the meantime, it went from about, 25. February, suddenly it had a big spike to about, 35. That has since come down to 20. So whatever momentum they were gaining, they lost real quick, like within the next month, basically. So I think that probably has to do a lot with promotions, but they're not getting any brand loyalty, it looks like. Like a promotion can lead to a spike in users, but it looks like MGM has good momentum. They are small, but their share of the pie is definitely increasing gradually over time. And FanDuel has both momentum and they appear to be taking advantage of like promotions, stuff like that. DraftKings doesn't have that.
I might have a couple of possible insights into that because my gym has a few degenerate gamblers. FanDuel especially was known all throughout last year for having the best promotional incentives where you would open a new account and they would give you money to make bets, and you could, if you were one of those people who was like a real degen with gambling, you could parlay that into thousands of real money. And they were not effective for a while at tracking unique accounts. So guys would open spoof accounts. They'd take like 6 email addresses and they would open new accounts with all of them. And the other thing that I noticed is not all of the online betting apps, at least at that point last year, were active in every single sport. And I thought that was interesting. I don't remember the particulars, but I know that FanDuel's big thing was soccer for the longest time. And I remember seeing that DraftKings was only active in like 8 or 10 sports. They weren't active in all of them. So there might be some weird like seasonal shifts with that. I'm not 100% sure, but I remember seeing something like that. So anybody who's really interested in the stock, that might be something worth looking at.
All right, players, I'm out. I've had enough of this degeneracy.
All right, we
Warner Bros.
appreciate
is
it.
playing with everyone's emotions.
Yeah, I
So
appreciate
click
the
on
help from you, dude.
DraftKings.
Have a good one.
Yeah, I
What
think
was
I think it's a good talk today, everyone. Opinion. I think it's a good time to say goodbye.
Yeah, I think so too. You guys have a good day and happy hunting.
Have a great weekend, everyone.
Good luck,
Leaf, you want to end it?
All right, see you guys.
Yeah, opinion. Well, I think I know what it is. Opinion was waiting for something to happen that I don't think has happened so far on the call. Pretty sure Opinion's been waiting for me to say cock.
You guys say more.
Or cuck.
I'm
Was
done.
it cuck? He's gone already.
And Warner Brothers is back up to 16 to play with my emotions.
And below 16.